What's up, everybody? Thanks for coming to Austin FinTech. We're going to get things going in about right now. So I am one of the board members of Austin FinTech, and what we do is we promote FinTech within Austin, bringing folks like you guys to the community, talking, sharing ideas. Maybe we'll get some customers or investments out of this, but the reason that we really started this, my colleague Justin and I, about 2 years ago, we were running an Austin FinTech company, and we realized there were a lot of other folks interested in FinTech too, but there was really no place for folks like myself and everybody here to share their ideas. So what started as, hey, let's get a couple folks together for a beer that's interested in FinTech, to something of this magnitude is really awesome. So thank you very much for coming. Beyond that, one of the things that Justin and I realized really quickly was there's actually a lot of successful Austin FinTech companies. That's, for example, NetSpend had an exit of IPO and then eventually an acquisition. Folks like Bankview, creating a lot of jobs up north. So let's give this applause. Moving on, I want to thank our sponsors that made this happen. First of all, the Capital Factory for having us in this amazing space. And then also for the NetSpend guys for all the beer and all the amazing food. So let's give everybody a round of applause. And before we get to the panelists, the one thing about innovation that's really interesting is it doesn't really happen in a vacuum. It really happens when you get folks from payments, or maybe someone from Bitcoin, or maybe a hardware guy talking about what they're interested in and finding some commonality to work together. So before we move on, I want all of you guys to turn around and introduce yourselves to someone that you haven't talked to tonight, and let's take a minute to just do that. All right, guys, cool. That was actually a lot better than I expected. All right, guys, that was awesome. We'll do more of that after the pitches. So we'll get things rolling. So we have 4 amazing panelists that are going to be giving feedback to the presenter tonight. And I'm going to go from left to right. So first we're going to start with Bart. Bart is the head of the wireless portfolio at ATI, and he works with, half the companies in Austin through ATI and 3-Day Startup?
That would be too much.
That's okay. Then to his right is Gabe. Gabe is the CEO of Bankview. And then next to him is John, the Chief Innovation Officer of Bankview. And then finally, we have Chuck, the President of NetSpend. So we got some experts here that's going to drop some knowledge on these startups. Hopefully, we'll see.
What about the beer?
This is the order of startups that are going to be presenting. It's going to be in a really quick pitch format, 3 minutes of pitching and 3 minutes of Q&A from the panelists. And then afterwards, we'll all get a chance to talk with one another and finish all their fine beer that NetSpend dropped for us. Without further ado, we're going to go with draft.
All right.
Thanks.
Thank you, guys. 3 minutes, so that's quick. So draft, think about it. It's not the NFL draft, it's the aerodynamic principle. As a group, the shared efficiency that you get together actually benefits the entire group. Bicyclists, NASCAR, race cars, you name it. As a group, you'll ultimately perform better. Draft is a crowdsourced investment analysis company that basically analyzes an individual's holistic investment portfolio to the top performing peers in the same respective risk tolerance category. So we classify you based on your actual holdings, whether you're conservative, moderate, or aggressive, and then compare your performance to the top performers in that same category across 3 simple things: returns, fees, and asset allocation. So it's very simple for an individual investor to see how they're performing against the top performers. Are they paying too much? And are they properly diversified? When it comes to long-term investing, low fees and proper diversification is ultimately what's going to make a difference. So if you think about that, you have two options today as an investor. You either go at it by yourself, use an online discount broker, or you use a financial advisor. Draft makes it easy either way. We provide you a blueprint that says where you're doing well, where you have room for improvement. You can take that blueprint, email it to your financial advisor, hold them accountable. No longer do you have to say, the financial advisor doesn't have the power to say, trust me, I'll take care of it. Now you have something you can talk about with your financial advisor. If you don't use a financial advisor, we make it very simple to use one of our online partners to open up a new account, plug those gaps with low fee, zero commission ETFs. We also have the ability to white label the draft application for RIAs, which is a very powerful tool for an RIA, which is a registered investment advisor, to A, increase their share of wallet with their existing clients, or B, gain new clients. Why does that make it possible? Because they can see their current clients, their outside investments that they have, and where they may be paying too much, or how, as a holistic portfolio, they may be unbalanced. They can say, hey, move these 8 mutual funds that you have at E-Trade over to us. We'll help you properly diversify. Yeah, we're going to charge you a management fee, but compared to our optimal portfolio, it's a good strategy. They can also gain new clients by giving the application free and allowing them to basically say, listen, don't trust me by myself. Here's the data to back that up. So we're Draft. Thank you for having us. And when you think about your investment portfolio, think about Draft.
How do you make money?
Yeah, how do we make money? So a couple different ways. I hit on a couple of them. So the people that want to do it themselves, so we get a referral feedback from our online investment partners, and we sell it as a subscription model. We're going to sell it as a subscription model to RIAs, either on a per user basis, what we call assets on platform, or under an assets on platform model.
Do you have anybody paying for it today?
No, we're still in private beta, or we're in alpha testing, about to move into private beta next week when we launch at FinTech.
Do I understand correctly, you want to go B2C and then also through the RIAs, B2B?
Yeah, so we strategically went B2C to, really the B2C model is to validate this is something the individual user wants to see, is seeing my investments holistically and understanding how much I'm paying in fees. Is that eye-opening?
Yeah.
And will that drive a behavioral change? The answer that we've gotten to that question is yes. And so the platform on the front end is a B2C platform. And on the B2B side, it's really B2B2C.
Right.
Because even on the B2B side, the end-use platform is... I talked about draft and football, right?
Are you worried about, or how do you plan to mitigate the potential channel conflict of the people you're asking to buy your product also being in competition with you directly to the consumer?
Directly to the consumer? Yes, a little bit, but as the B2C side is ultimately was a market validation play, we're going to get critical mass of users on the platform.
So the real revenue model's the B2B2C.
Yeah.
Where are you at setting up the partners to open accounts and
We secured one,
Okay.
already done. Again, TD Ameritrade is signed. We're in conversations with Schwab right now. And then we have 5 people in the RIA paid pilot pipeline right now.
what are, in broad terms, what are the economics? How do they pay you back?
TD Ameritrade?
Yeah, is it
So, yeah, so TD, I can't get into too many.
generically those kinds of cut?
Yeah, so basically it's paid on an account opening. So they have to be a new account to that customer and they pay us on that.
Okay. One more question.
How big is, like, when you think about the market size, like how many, in your view, I mean, obviously there's a lot of investors out there, but how big do you view your sort of addressable market for this?
So we look at our addressable market of the generation that's about to have the largest transfer of wealth in American history, which is the millennial generation. And we subset that into what they call the mass affluent, which is the segment that is stuck in the middle. They either they have enough money to make major mistakes if they do it themselves, yet they don't have enough money to really justify the value of a financial advisor. And that's about 6 million, its overall mass affluent is 24 million households. Mass affluent millennials is about 6 million households in the US. So it's quite a sizable market.
Thank you.
Thank you, ATX FinTech. Enjoyed it.
Thank you. Up next, we have Peeptrade.
You got what you want me to do? Just present. There's no clickers.
No, I'll do it from here.
We have to go over there. Oh. Do you want to talk from here?
Yeah.
Alright. Nope, stop pressing keys. Press that loud.
Okay. So hello, thanks for inviting us. We're Peeptrade. My name is Juan Mendoza. This is Cinzia Pinamonti. We've been on the financial industry for over 10 years. Cinzia has a background in, you can say about.
So I'm the marketing manager for Peeptrade.
So Peeptrade is a social trading network that allows you to peek into the portfolio and trading activity of the most successful traders in real time. Why we built Peeptrade? Well, as a self-directed investor, I obtain my ideas mainly from making my own research and reading other people's research and newsletters. And this is where I found 5 problems that we're trying to solve here in Peeptrade. The first problem I saw is where to start looking among thousands of daily publications and how to compare them. It's like actually finding Waldo. So Peeptrade was created so successful traders could be found on a single platform. You will be able to see how they rank in different strategies and select the one that better fits your needs. The second problem I saw here is, well, are these guys doing what they're telling me? Well, on Peeptrade, we obtain the information directly from their brokerage account, so you can see what they're actually doing with their own money. The third problem I saw here is, most of the newsletters and research doesn't have a track record. So how should I select them? And if I found a popular one, how do I know it's not just because they're good at marketing? Well, on Peeptrade, investors will be ranked based on performance. Before you subscribing to them, you will be able to see trading statistics, returns, ratings, reviews. So the trader just needs to do what he's good at, which is making money, right? So the fourth problem I saw is, well, timing is everything. If you don't believe me, you can ask this guy. Markets are very dynamic. They change every single day, so every single minute. So most of the newsletters just send you periodic updates, which it's very frustrating. On Peeptrade, you will be able to see what they're actually doing on real time. So the last problem I saw is when I want to buy a car, I want to buy the whole car. I don't want to buy different pieces from different dealerships. I just want to buy the whole car. Most of the newsletters just give you specific information of specific securities. So in Peeptrade, you will be able to see how each trade fits in the portfolio concept.
So a lot of people ask what's in it for the top traders. Why would they share their portfolios? Each top trader is going to be paid for every peeper that they have.
So if you want to join Peeptrade, go to peeptrade.com and sign up for it.
Sign up for beta.
Thank you very much. Any questions?
What's the data source for the top traders that you're using as benchmarks?
Sorry?
What's the data source for the alpha traders, the top traders that you're using as benchmarks?
Well, we're trying to be, let's say, meritocratic, so anybody can be a trader. So we're trying to open these to everyone.
So how do you get past the chicken or egg of without top traders, no one signs up for them?
Well, we're first of all, we're pitching to traders, and then we're doing online marketing to bring the whole thing together.
On the traders, how much are you going to pay them, and how much is that relative to their income from trading since they're so good at it?
So for instance, let me put you an example. If a trader charges $30 per paper, we call them papers, he will be making about $250,000 a year.
They pick their own price, so they get to choose whatever they want to share their portfolio for.
So most of the newsletters have $100 on average price, so you can make the math like it could be we have 1,000. I mean, it can go on.
So what separates you guys from like the social trading platforms over the last couple of years? There's like WikiInvest, eToro overseas. You know, there's a bunch of these guys where you follow traders, you do the same thing. Is it just the fact that you're monetizing the people that you're following?
Well, most of the social trading networks, they're free. And actually, eToro, it's a good example because they have their own brokers. So the way they pay their traders is like making more volume on trading.
Sure.
You know, so it's kind of the traders are motivated to do more trading, which is it's not something good for the investors. Brains follow the money. If you want to have the best traders in the social trading network, you need to have a reward for them. You know, and most of them are free.
But if I'm a trader on your, or rather, if I'm just a regular old investor,
Yeah.
and I see that you're trying to push a trader on me, can I just presume that that's because you're going to make more money? Like, I guess, you know, where's the transparency for me?
Well, you
as
will
an
be
investor?
able to see how the trading statistics, like how many trades he makes, what's the strategy, how many winning trades, what's the average winning per trade, the losing.
So you guys will score the traders.
Score it all.
Yeah, so there's a
You're
whole
sort of the
screener where
okay.
you scroll through
Got it.
and
Because half the
pick the
people
one
on
that
these
best
social
fits.
networks are manipulating the market, the
Yeah.
shorts, and they're trying to do the other things in the market, right?
That's right. We're completely transparent. We get information directly from the broker.
Got it.
And we post that, and we have different strategies. So
Last question.
Very cool.
So just a suggestion, there's two parts to your marketplace.
Yeah.
Think about how do you cheat on one side to get critical mass.
Yeah.
Because building both sides is incredibly hard.
Yes.
If that means having a co-founder, you give a big chunk of your company away, you
Yeah.
get half of that, that's worth it.
Thank you very much, and I think
Appreciate that.
Very cool.
So we're right. Thank you.
Thank you. Great product.
And up next, we got Liveoak.
All right. Hi, I'm Pete Brown, and this is my partner, Andy Ambrose. We are Liveoak Technologies, and we are making financial paperwork simple. So, financial paperwork is complex and confusing. It requires too many steps, and oftentimes the customer data, even with newer technologies, is wrong. Right? Anyone who's rolled over an IRA or opened an account recently knows exactly what I mean. Financial institutions have to deal with behavioral issues like procrastination and inertia, have to do with customer data being in not good standing, and have to do with lost transactions and assets because of this. Liveoak Net is a software platform that allows institutions and advisors to securely communicate through a browser via audio, video, and chat. It allows you to co-browse documents and fill in data with multiple parties. It grabs compliant data and it makes it available to the back-end systems, tracks data entry for auditing purposes, and allows you to get paperwork signed anywhere, anytime, on any device, all in a simple web session. So Liveoak Net increases close ratios, time to fund metrics, and reduces compliance issues with all ranges of financial paperwork.
Yeah, so I'm Andy Ambrose. I'm actually angling for our tagline not to be making paperwork simple, but to make it suck less. Because it does suck. I'm a 20-year veteran in financial services. I think there's a huge market here. There's a couple of big dynamics happening. One, you've got baby boomers who are retiring. And so there's this $20 trillion of wealth that's going to be rolling out of retirement plans into IRAs. And eventually that wealth is going to transfer to Xers like ourselves and millennials like Justin. And do you think Justin Christ is going to show up and drive downtown and park his car and go sit in front of a Merrill Lynch guy? Or would he rather get a text or an email so he can pop right into a session, have a quick conversation, and knock out any kind of paperwork that's done. That's the way it could be. So the problem is 4,000 FINRA organizations that are all vying for a spot or their share of this huge rollover dollars. They cannot innovate internally fast enough. And so there's these legacy systems and workflow that exist. And what Pete and I have developed is exactly a solution that can lay right on top of that and go into the system, take existing paperwork, turn it into a digital copy, collaborate on the form, and sign on the spot while you're having a video session. Thank you.
Thanks.
Where are you getting the data? I mean, this seems like nirvana, right? Like, I don't ever have to fill out another form again. Wouldn't that be great? But how are you actually doing that? I mean, how do you get all this data so that?
So think about it. We are a cloud-based API system. It's data in, so we can integrate with CRM systems, or if someone wants to fill out the data in the front end, we can then jump into that conference to make sure the data is valid, compliant, and in good order. And then on the back end, after we sign that, we can pipe it into the back end system, Salesforce. So there is work up front. People have data sets already they're using. Problem is that data is usually bad.
So guys like DocuSign and I don't know, there's probably 3 or 4 different companies like that. Well, yeah, I mean they'll they enable the same thing except without the little video chat next to it, which is interesting. But is your advantage that you're essentially mapping over the guys like Wolters Kluwer who do the 14,000 institutions, their actual forms? Are you working with their systems, which and then somehow, I mean, I'm trying to understand what's the deal here that's actually really game changing.
So the big difference, we're actually partnering with DocuSign.
Okay.
What we're allowing is a synchronous, real-time, engaging, and emotional discussion about financial transactions that are complex, answer any questions, and quickly fill out the data, make sure it's compliant and in good order before someone signs it. Guys have 20 to 40% not in good order rates when they send out a PDF or something. You can get this done real time, look at it, hand it over, and walk away.
So the problem is that the DocuSign documents that currently get signed typically aren't enough. Is that the problem?
What happens is DocuSign still requires a form to be filled out, locked down, sent in the old way of email. And so just for an example, we had 5 angel investors who seeded our company. We had to void 5 times the final term sheet convertible debt because someone's attorney said, hey, I got this one last provision I want to add in. And people were signing version 2, 3, 1, and they couldn't find which the right copy. I got one guy saying, I'm out because I couldn't do it. So in theory, our session, what we can do is invite multiple people to a transaction, real time, collaborate, make any changes on the spot, lock that down once we've all agreed, sign without ever breaking the communication. So I think the real thing we're doing is solving small rollovers effectively. If you get a good intention right on the spot and you don't get them to complete the action then, chances are there's half of them that are going to abort the transaction and not do it.
Last question. Who's your target financial institution for this?
So we have conversations with 8+ very large institutions that are 401k record keepers, broker-dealer wirehouses who are engaged in ACATing, bringing over advisors and ACATing their entire clientele. There are anyone who's in the business of IRA rollovers, so RIA shops. We signed our first customer, 40-seat contract with a national RIA that has 40 offices nationwide. Yep.
Cool. Thank you, guys.
Thank you.
Can you sign it on the airplane? So just close it with you.
Which network is this?
Classroom.
One person walks over.
All right, guys. For our final presentation, we have SelfLender.
Hey guys, I'm James Garvey, I'm co-founder and CEO of SelfLender, joined by my co-founder Connor Swanson. 1 in 4 adults in the US do not have a credit score because of a lack of data. This is a huge problem, and a lot of
Now you're talking about like.
it's like 64 million people that are in this unknown credit bucket or be classified as high risk. When I was in college, getting a credit card was very easy, and building credit was easy. You know, you go on campus, you get a slice of pizza, t-shirt, frisbee, and so that was a problem for a lot of people. A lot of people had a lot of debt. And in 2009, we had the CARD Act, which just passed. With the CARD Act, basically the whole idea of giving students gifts in order to sign up for a credit card is now illegal, which is probably a good thing. The problem, though, is that they're not building credit history. We're seeing the first group coming out of college without any credit history at all. At the end of the day, just having, paying your bills on time doesn't mean you're going to even have a credit score. The credit bureaus only track a few data points, particularly auto loans, credit cards, and with that, it becomes a catch-22 for establishing new credit. If you don't have credit, it's hard to get credit. So, SelfLender is the first very simple way for consumers to establish credit history using what's called a credit builder loan. Ostensibly, it's a savings plan that builds credit history, but in reality, it's a small, secured loan that is used to demonstrate your ability to pay back debt. The way it works is somebody signs up for SelfLender, and they say, okay, I don't have credit, I want to establish credit, so they create a $300 credit builder loan. From there, we lend them $300 that goes into a 6-month CD. The CD cannot be touched, and it has to mature before they can access it. At the same time, we open up an installment trade line that says they owe $300 and to be paid back in 6 installments of $50 a month. As they make the payments, we report them as positive payment history, and then at the end of the term, they've paid off their loan and their CD has matured. We launched at TechCrunch Disrupt. We're currently in Techstars. We just closed our round of financing. We have about 14,000 users, roughly 2,000 active loans today. We're looking for super smart people to join in case anybody wants to come. And we're about to announce our banking partnership, which allows us to scale. That's the most important part. So yeah, there we go. My background, I'm a software engineer. Connor worked at Experian, he's our product guy, and Anthony also is a attorney by trade, so we've got compliance, credit bureaus, and software engineering. Thank you.
I love your product, so.
So you guys, you've got the bureaus that take so they're accepting your data?
Not all.
Okay.
And so that is clearly a challenge. However, it's being solved with the banking relationship.
Yeah, that's big. And how are you getting customers today? How are you getting the 15,000?
So I've been in direct marketing for a while. And we've been able to do really finely targeted CPA campaigns, also buys on Facebook, Google, Twitter, Pinterest, acquiring customers like $15, and be able to do that on an operationally profitable basis.
Is that your route? I won't talk here, but is that your route to make it like big? I mean, if you think about this is a consumer-facing product, so you got to have, there's 60 million. So what's your thoughts on how you get to the 60 million?
So, Connor is a product guy. I'm a direct marketing, software engineering guy. Together, we're going to build something that's really, really good and people like. We're almost there. We're getting close, and so having a product that people love is going to make a difference.
Part of that is, do you have partnerships, or are you really going to go direct for all 60 million? Can the banking relationships help with that?
The banking partner allows us to scale, solves our compliance issues, allows us to report to all 3 bureaus. But additionally, we're about to announce a partnership with a financial wellness company. So there's channel partners that we can do. Also, there's credit scoring websites like Quizzle that have huge influxes of customers that they can't monetize. And so think of SelfLender as a way to rehabilitate customers who have not yet been able to access the traditional credit system. So they come to us, send them back. So that's think that's an interesting idea.
I just want to say I think it's a fantastic product. Just full disclosure, he came and talked to us about it at Bankview, and we were blown away. I think it's just brilliant. One of the things that I think it could actually have applications in is serving some of the smaller institutions, or even maybe perhaps some of the bigger ones that would just like a system they can drop in and generate fee revenue from this type of product on their front line. So you might want to think about community FI branches, or even maybe some of the regionals that don't have the sophistication to figure it out and do it themselves, just using your platform for a fee. It's a great product. Love it.
Thank you.
One more question, time board?
I'll give you a nickel of advice. Having spent a long time trying to serve, I think, the same customer, right, guys? This is our customer. I'd encourage you on your distribution strategy. We spilt a lot of blood trying to get banks to promote to this customer. And most banks don't care about this customer, honestly.
Yep.
And so I think when you think about your distribution strategy, keep that in mind. And we were really successful focusing on consumers, partners, where they live and work, be in the neighborhood, figure out partnerships that will get you to this consumer, and they will love you for it. And the fans that you will create will be like no other business you have that I've seen.
Yeah,
Good luck to you.
Thank you. What we've seen is you're 100% right. Banks can be a pain in the ass to work with.
They suck as distribution channels.
Come on. We solved that problem. That's what we do.
And so we're
It's not that it can't be.
You're right. All right.
we're using banks to just power our back end.
Yeah.
We think it's, but yeah, thank you. That's great.
Great product. Thank you.
All right, thanks everybody for coming. So Austin FinTech has an event every first Thursday at the Capital Factory here. We would love for you guys to sign up on our meetup. Come talk to us, come talk to the panelists, and speak amongst yourselves, because there's an amazing group of folks that RSVP to this. So thank you guys all for coming. Thank you very much.
Look good to you.